So GME, right? We marked off this pink box, right? We marked off this pink box, and the reason that we had marked off that pink box was because we had the visible range volume profile, or the VRVP, and we had recognized that when we zoomed out since the sneeze, we had recognized that there was a large gap in liquidity on GME's chart at that exact zone. And so on that video that we had done on Friday, I suggested that there was a legitimate threat that GME could actually gap underneath that pink zone. And that's exactly what we did this morning. So this morning, if we zoom in, you can see that we actually started on a gap underneath that pink zone. The reason that we see this beautiful bounce, right? The reason that we see this beautiful bounce is because this is some trend exhaustion, right? And on top of that trend exhaustion, GME finds itself in that area of super, super low liquidity. And we have seen that every time GME enters that box, there are always really, really big candles that follow, right? Whether it's big candles to the downside or big candles to the upside, it doesn't matter. All we know is every time GME hits that zone, there is large and large amounts of volatility. And the reason being is because in that zone, in between the pink lines, there is no liquidity. There are very few buyers and very few sellers in that zone. The buyers and sellers lie outside on both directions of that zone. Okay? So this is why we have seen so far GME on its large gap down. This is why we've seen GME recover a decent couple of percentage points, is because GME finds itself right in that zone now. And that zone is an area of nothing but illiquidity. And with that zone comes really large price movements. So if we want to see, right, if we want to see GME make a big pop here, we need to see GME get back above this pink zone, right? And there's a couple reasons for it. One, we just want to see GME above this area where there's a lack of liquidity because we want to see buyers step in this zone. And number two is the fact that you still haven't broken the lows of this formation over here since that squeeze event that we had take place. You still have yet to break the lows of this zone. So technically speaking, you are still above a higher low. It's a ghetto higher low, but it is a higher low nonetheless. So with regards to GME, this is the zone that we are focused on for this week, is between basically $20 to $19. That's basically the zone that we have big focus on for this week. Okay. Now, beyond the fact that we're in that zone, two really big things happened. Okay. Big thing number one, you finally filled that gap. The gap that was left from the post offering news, right? So the offering had completed on a Friday. We gapped up on Monday, right? So we finally filled that gap from that offering completion news. Not only did you fill that gap, but you have also tested this macro golden pocket now from this low to this high that we made. That's this golden pocket right here that you've tested. So we filled and tested two technically very important parts of GME's chart. Now, number three, okay, this is where people can start getting a little bit excited. Number three is that you have left a big gap here, right? You've left a gigantic sized fucking hole all the way back to $21. Excuse me, back to $21. And then beyond the fact that we have that target to aim for, we do still have two Jackie indicator targets at both 2440, 2505, and 2863. And remember when I was telling you guys that the lower that they drive this price, the better it is for us, because those indicator targets have a 95% success rate. Given that they have a 95% success rate, we're very, very, very likely to come back and fill those indicator targets, right? And because we're very likely to fill those indicator targets, this is why I tell you guys that the lower we go, the more exciting it should be. Because this is kind of similar. Now, I know a lot of you guys weren't around for this. Okay, so that's all right. But a lot of folks weren't around when we had an indicator target on GME at $18, right? We actually had an indicator target that was left on GME back from these prior highs over here. And it was at 18 something. I don't remember exactly what it was. But with those indicator targets that we had on GME, every time we watched it go lower and had yet to fill those indicator targets, I kept telling everybody, not in the Discord as well, but also on YouTube, I kept telling everybody, I was like, guys, listen, the lower that GME goes, the better the opportunity will be presented for us to make a metric shit ton of money. Because we know that we're going to very, very, very likely come back and fill that indicator target, right? Well, what ended up happening now, I think it was on the weekly, if I remember. Yeah, so the indicator target was on the weekly at 1990, right around there, 1990, 1980. Okay, so when we knew that that indicator lied at right along that pink trend line, right, that's about where our indicator was. I was telling people that the lower that we go, the bigger and the better the opportunity will be. Right? Yes, I did. Yes, I see SPY. Don't worry. I'm paying very close attention to it. But we're focused on GME discussion right now. So when we see these kind of things, right? We saw GME's indicator target, just call it fucking $20. We saw that. And then during this entire range of price action on GME, we never got to that indicator target. And so I suggested to people, hey, $10 might be a really good time to buy GME. And the reason it might be a really good time to buy GME is because that's where the cat took his first double down position on GME. And so we know that he is likely, or at least considering the idea of reloading on these lows, which is exactly what he did. And then the share price fucking rocketed. Now, beyond the fact that the share price rocketed, right? People took an opportunity to buy GME at 10, and then we hit the indicator target before the cat came out and did all of his stuff. And that was a 98% gain for a lot of people. So for a lot of people in the Discord and for a lot of people that were following Jackie at the time, we had already made 100%. So we were basically trading with free money. And then when the cat comes out and sends the share price on a double gap up, that was basically free money for myself and my entire fucking team. It was legitimately free fucking money. And so we took advantage of that free money and we made a shitload. We locked in profits and we did all of the right things, right? Now GME finds itself in a very eerily similar situation in that we have multiple indicator targets to the high side. And these are not small percentage gains. To get to 24, that's 30%. To get to 25, that's 35%. To get to 28.60, you're talking about a 50% gain. Now, I know some people are going to sit there and fucking bitch. Oh, it's not enough, Jackie. I was promised MOAS. I was promised 3,000. Okay, nobody promised you anything. You invested your own money because you, person listening, decided that you liked GameStop enough to put your money into it. So you are solely responsible for your own financial decisions, especially regarding GME, when a lot of people don't want to listen to me because I tell them that it's going to go back to 10, and then everybody's like, oh, Ken Griffin, head plant shill. And it's like, well, no, I'm actually just trying to prepare people for something that could potentially happen so that way people have money so that they can buy the stock if and when it gets to 10. Right? And so a lot of people have now been listening to these airplane indicators and this Elliott wave and this, that, and the other and all this other fucking bullshit that's never fucking worked. And now everybody's fucking bag holding a dog shit position while we ended up selling a 35% move because we don't suck at trading. And so I share all of these things on GME for you guys to kind of get an idea of what we can anticipate moving forward. But the problem with GameStop right now, and this is not specifically a GME problem, this is a problem for every stock in the market right now. The lower and longer SPY continues to be a piece of shit. The longer and lower we can anticipate stocks like GME continuing to grind lower. Why? Because the small cap market is running alongside the SPY and the NASDAQ. And I don't know if you noticed, but RTY is down way bigger than all the other indexes And not only that, it was down over 4.5% this morning before this gigantic fucking bounce that we're seeing. That's not good. In fact, that's tremendously terrible. Because GME is a small cap stock, and even if it is not in the IWM, it is still a small cap stock that gets hit the same way that the other small caps do when the market and the small cap market gets fucking cracked. Right? So it's hard to sit there and say, yeah, GME is going to go to the moon because my hopium says so. It's not how things work, unfortunately. Now, another thing that I want to discuss, okay, we're going to turn off all the drawings. We're going to turn on the TD sequential indicator. All right. So, folks, today, if you guys remember the discussion from Friday when we were looking at the TD sequential indicator and talking about the long signals, right? When this indicator exclusively prints 13 signals, right? That is what we were looking at, was only the 13 signal, right? Because the 13 is the biggest and best long signal. And if we look, right, there's 11 times that it's happened now post sneeze. There's 11 times that it's happened. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 8 of those 10 times have led to a 50% move or greater. 8 of those 10 long signals that you see on your chart have led to an average move of 50% or greater on GME's chart. 50% or greater. And you are now currently printing a 13 count, a long signal, on GME right now as I speak. This won't go away. This isn't going to end today. This long signal will, in fact, no matter what happens, this will print. And that is a long signal no matter what. There is nothing that will change this. You guys don't have to ask me 19 times from today. That long signal is never going to go anywhere. It is going to print today no matter what. So we are going to have the 11th conclusive signal on GME. All right? So we know that 80% of the time, this leads to an average move of 50% or greater. Interestingly enough, remember the indicator target at 2860, right? 2860. Well, look at this, folks. 50%. Boy, that sure is interesting. That sure is interesting, right? Now, with these long signals that we have seen printed on GME's daily time frame, specifically the 13 long count, right? When we print these long counts, a lot of the time, it doesn't just long signal and rip. This was one of the instances in which it did do that. But a lot of the time, it ends up grinding a little bit lower, right? The long signal actually printed here on this one, you ended up coming down another 10%. The long signal on this one printed here, you ended up coming down another 20%. The long signal printed on this one, now you didn't move that much further down, but you moved another 6.5% lower. The long signal printed on this one you moved 30% lower before starting the best summer run that we've ever had. This long signal printed perfectly at the bottom. This long signal printed perfectly at the bottom. This long signal printed perfectly at the bottom. So there are instances where we have seen that long signal doesn't necessarily immediately cause a reaction and a huge significant bounce. Right? Now, it's not to say that it can't happen, because it can, but part of the problem is the stock market, because the market is not in great shape. And because the market is not in great shape, it's hard to anticipate that GME will bounce in the face of all of that just because a trend exhaustion indicator is telling us that it might. So in my opinion, what makes the most sense at this stage would actually be to see GME grind lower to that daily 200 period moving average and test it. I would like to see the daily 200 period moving average tested, and that sits at about 1750. The reason I would like to see it tested down here is because we still have this golden cross. It didn't die just because we lost the daily 50. This golden cross is still very legitimate and still a very real threat. We just haven't tested the daily 200 yet. And I personally would prefer to see that test of that daily 200 period moving average. Because then you could say that you have tested both moving averages of said golden cross, and that could be what propels GME higher on top of that 13 count that we have on the indicator. Right? And then we turn the drawings back on. Right? And technically speaking, right, if you draw a trend line at this level, there actually really isn't a ton of support and resistance at that 1750 level. So technically speaking, other than that daily 200, there really is not a lot of support underneath that. So if we continue, right, if we continue to see the SPY and the rest of the market act like a total fucking piece of shit, right? If we continue to see the market act like a piece of shit, we can probably expect that we're not going to see GME make that first initial big pop that we all want to see. It's more likely that it's going to go in search of support. All right, now here's where I'm going to prepare you guys a little bit for the worst case scenario. And I say worst case scenario. It's not like it's even a bad or a negative thing. It's just to have you guys prepared for the what if. The what if on GME is if it loses and fails the daily 200 period moving average. Because if it fails that, folks, there is a statistically high chance that GME is going to go all the way back down to $10. And I don't make the rules. I'm not the one controlling the stock. I'm not being like, yo, GME, can you not go to 10, bro? I'd prefer if you would just go higher. I don't make the fucking rules. But I do keep you guys prepared for the worst case scenario. And if GME were to fail that daily 200, there's a statistically high chance of going back down to 10. Why do I say that? On the 30-minute time frame, I believe it's the 30-minute, yes. On the 30-minute time frame, guys, when we made our first initial big pump run on GME, we actually left indicator targets. And on the 30-minute, you actually left an indicator target right down here at $10.25. $10.25. Oh, but now people want to listen to me telling them that it probably is going to go to 10. Because the indicator with a 95% success rate on the 30-minute time frame is suggesting that if price continues to break down, there is an indicator target suggesting that we come all the way back to $10.24. And if it comes all the way back down there, think about the number of people that are going to be shitting their fucking pants. Right? I mean, look at the panic and the fear in the market today. Right? Look at the panic and the fear that's happening in the market as we speak right now. Right? I mean, stocks are having some of their worst days in years. The VIX is having one of its best multi-week runs in years, if not decades. And there's a lot of panic and fear out there, right? Even some of the brokers are not even turning on. Right? Like, there is legitimate panic and fear in these markets right now. And so because there is legitimate panic and fear, right, it is difficult. It is very difficult for me to sit here and tell you guys, yes, GME to the moon, when the rest of the market is a bunch of terrified little fucking bitches. Also, there's a 15-minute indicator target at 1645. Just, I remembered marking off that one. There's also one down here on the 15, but nobody wants to hear that one. Because if I actually start marking out some of these indicator targets, people are going to have a fucking shit fest. Another indicator target at $10.18 as well on the 15-minute. So, with regards to GME, right? I am a trader. I am a trader that is long on GME stock, and it's one of the very few long stocks left in my portfolio. But at the end of the day, I am a trader. And as a trader, I like to buy the areas that are the most value, right? I like to buy the areas with the deepest value that present the most amount of opportunity to make a lot of money. That first opportunistic zone lies right where we are right now, right? We're at zone number 1, where it is a great opportunity to buy GME. That is not financial advice. I am just simply saying out loud that it is a great opportunity to buy GME in this range. The next opportunity arguably doesn't come. I wouldn't even say the daily 200. I would say that $15 is actually your best spot. And the reason that I say $15 is because if we go ahead and we just mark a little trend line off at $15 and we look over to the left, right? $15 was actually the spot where we made that double bottom back in January and March of last year before we had 2 really significant moves, right? The first significant bounce off of 15 gave us 63%, and the next significant bounce gave us 80%. So we know that 15 is a technical area of support and resistance, right? We know that 15 is a massively, massively important zone, both in terms of its support and its resistance. Currently, we're above it, so it's supportive. So the next big zone that I would be personally looking to buy is going to be at $15, right in that zone. It doesn't have to be 15 exactly. Don't miss the point. But it's that the opportunity at $15 certainly exists if the price continues to push down into that range. And then you guys already know the last price, right? The last price for the best opportunity is $10 and anything underneath that. Any price on GME underneath $10 is nothing but pure value. Because at that point, GameStop will actually have more cash on hand than their market capitalization. Right? GameStop will actually have more cash on hand than their market cap. And that's nothing but pure value. And if you think that GME is fine, that we haven't done anything, we haven't gone anywhere, and that the company is financially more stable than they were before, then you guys would all look at 10 the same way that I look at it and say, wow, there's a lot of opportunity there on GME. Right? So this is why I tell you guys, I'm not interested in buying GME until any of those 3 circles. And even now, at this zone right here that we're at, between $20 and $19, even that zone has me a little, I don't want to say scared, but a little hesitant to pick up some shares on this. Because again, the market is such a fucking turd today. And the market has been a turd for the last couple of weeks. And the VIX is still remaining elevated. And we're not getting much of a bounce on small caps or NASDAQ and tech. Right? So I'm hesitant to pick up GME or any stocks for that matter until the market can prove that it can actually hold its own for a little while. But look at the moves that we have made over the last couple of weeks on SPY. Right now, you haven't broken anything because you're still above this low that we made here in April. So you still technically have a higher low. Right? But it is difficult to ignore the fact that SPY has now made a 10% move down since the all-time highs of the market. Now, we have some harmonic structures, and I've also marked this one off on SPY if the SPY does continue to grind lower. But we do have some harmonic structures here on SPY that could give us a little bit of an idea as to when we could anticipate perhaps SPY making a turnaround. Now, SPY already has the first harmonic completed, and it's very likely gone in search of the HOP zone. You'll also notice that SPY futures have bounced directly at the daily 200 period moving average. Almost perfectly, one would say. So if the market can find its footing, think about all of the positive things that GME has going for it right now. You've tested the golden pocket. You've tested the liquidity zone. You've printed the 13 count. You filled the gap that you left from the end of May this year. Right? You have done a host of technical things that suggests that GME could make its reversal here. Now, I'm not saying that it is. I'm saying that there are enough certain technical aspects that are telling us that if the SPY finds its footing and stops just nuking into Earth's core, that GME could find a really significant bounce. Also on the daily time frame, if we simply look at the RSI still hasn't even entered the bear zone yet. We're still not even at the bear zone. We're sitting on the top of it, but we're still not inside of it. And if bulls defend this bear zone and we stay outside of it, you could see a very similar move as to what you saw down here when we made this explosive move. And again, we've got all of these indicator targets up here that are suggesting to us, hey, dummy, this thing's going to reverse eventually and come all the way back here. Maximize profits, maximize profits, maximize profits. So we're going to look for the best opportunity. And right now, there's an opportunity presenting itself. But the problem with this opportunity in particular is that the market is having one of its most unique days within the last several years. And it is difficult to want to long things in the face of one of the most unique events that we've seen in the market over the last 4 to 5 years. So it's easier to remain patient. Let price action develop. You guys are all holding GME stock anyways. What do you care if it goes a few bucks lower? What do you care if it goes a few bucks higher? You're not missing anything. By being patient and allowing price action to develop and allowing the market to find its footing, we can find unique opportunities here to make some really, really good long trades on GME. It just requires people having patience. The more patience that you guys have, the better that this will ultimately turn out for you. I fucking guarantee you. That's a Jackie stamp of guaranteed approval. You just must have the patience and fight your emotions in these moments. Believe me, it is equally as difficult for me to fight my own personal emotions right now. Because I realize how difficult it is looking at this thing after making one of its most historic moves on the chart, that it essentially sold it all off. Right? You sold 70% of the fucking move off. And that obviously sucks. But there is another opportunity presenting itself the same way that it did down here. That opportunity is presenting itself in the same way that it did down here. We just now need to find the best opportunity and the best way to take advantage of this potential opportunity that's coming. And with that comes patience, calm, cool, collected, letting price action develop. But the lower it goes, the bigger the opportunity to make more money ultimately is, right? If it bounces from here and gets to the indicator target, 50%, cool. But what if it goes to 10? If this thing goes all the way to 10 and then it bounces and it gets to the 2860 indicator target, that's 170% in gains. And on some options contracts, that will be thousands of percent. Not hundreds, thousands of percent. Life-changing money. This is why I say nobody should be panicking about how low GME goes. We've got indicator targets. We've got reasons for GME to go back up. We have a company that is fundamentally in a way better position than it was at any point in this area. At any fucking point. So all it requires now is people to just have some fucking patience and to really fight off your emotions right now. Because think of the emotions in the market right now. And I don't say that to spook you. I look at Twitter. Dude, I was on Twitter for probably 6 fucking minutes this morning. And the number of fucking stupid, dumb, dog shit clown fucking replies that I was seeing on Twitter speaks directly to the level of fear that is in the markets right now. It is a total and complete fucking shit show. With a bunch of the can't doers, the never havers, and the never willers telling you how tremendously bad everything is. It's the worst. You didn't call this. You missed that. Blah, 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 blah. Meanwhile, their own trading accounts are minus fucking 400%. So they need someone to take it out on. The markets are 100% emotionally driven right now. And that's just the long and the short of it. The markets are purely emotionally driven right now. And that's why you're seeing the SPY fucking gap down 4%. Because everybody is fearful. And we're going to get into this discussion about what's going on with SPY. But we're going to talk about that here in just a couple of seconds once I'm done with the GME conversation. But you guys, right, here's where I'm going to give a little bit of... Here's where I'm going to give a little bit of a pep talk, right? And I know you guys are probably all fucking jacked out of the pep talks and whatnot, so that's fine. But you guys have invested in GME. A lot of you guys have invested in GME since 2021, right? So it's been 3, almost 4 years for some of you guys. And you guys invested in it back when GME was way up there, right? Lots of us invested in GME way up here and way up here and way here and 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 all the prices where it's currently underneath the price of GME, or excuse me, above the price of GME currently. So a lot of us are red on our GME position. But when you guys bought the company here or 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 anywhere on this fucking chart, when you guys hit the buy button on GME, you weren't asking yourself, well, what if the market crashes? Because then my GameStop investment and hurt. You guys weren't asking that. You guys weren't saying that. When you guys hit the buy button to buy GME, you guys bought it because you felt it was undervalued. You felt that this company was undervalued. It was being shorted nefariously, and you wanted to fight against that. Am I wrong, chat? Tell me, chat, am I wrong about that? Tell me, when you invested into GME, however long it's been for you personally, did you invest because you felt that GME was valuable? Of course you did. I don't really actually need you to answer that, but of course you did. So why does it change here? Why, in some people's minds, did it randomly decide to change here? What about GME fundamentally changed that made people switch up their tone? You want to know what it was? It's emotion. Because there are a lot of people trading GME stock, and I don't mean this in a negative way. There are a lot of people trading GME stock that don't know what they're talking about. There are a lot of people trading GME stock that don't know what they're doing. There are a lot of people trading GME stock that don't have the slightest fucking clue about price action. And there's nothing wrong with that. But it becomes a problem when people start FOMOing into the highs of the biggest run in the last 3 years, and then it starts selling off, and those very same people, right, all start to panic. The reason they start to panic is because they don't understand what's going on. They don't understand stocks can't only go up. Oh, well, what about $4 billion in cash? Technical analysis can't put that. Some of the people in the community that people look up to and consider them smart were the same people in my replies telling me that technical analysis can't predict GME coming down because they have $4 billion in cash. These are people that are respected within the GME community who told me just a month ago that technical analysis can't predict GME going down because they have $4 billion in cash. And these are people that are considered smart. So imagine how it feels to be a regular average investor that doesn't look at stock charts, that doesn't care about all that. They just buy and they hold. And then imagine watching the price go down and having to listen to everybody tell them reasons why. Oh no, this is going to go back. It's going to go up. Don't worry. This I was early, but I wasn't wrong. Early is basically wrong. Let's all be honest. Early is basically wrong. Right? But for too long, we have had to listen to people be wrong about GME. And now with the markets being driven as emotionally as they are right now, this stock is not immune from emotional movement because a vast majority of the people in GME community are not educated on stock charts. So when they see it going down after reaching a peak of $65, a few things happens. First of all, Ryan Cohen's literally Hitler. Right? Ryan Cohen is literally Hitler because he diluted the stock twice. Forget about the fact that he put $4 billion of cash in GameStop's bank in preparation for an event like this. But Ryan is literally Hitler because he diluted the stock and made the company stronger. Right? That's been the ongoing theme for a lot of people. Right? Whereas if you just think logically, you go, oh, wow, Ryan put $4 billion of cash in the bank to protect GME on the off chance that there was some turmoil in the market. And now suddenly I'm feeling pretty good about my GME investment, given that this company is very easily going to be able to survive any economic recession that we may see. So perhaps Ryan Cohen isn't actually Hitler. Perhaps he's the bear Jew. You know what I mean? But at the end of the day, folks, you invested in GME because you believe in the company. And if you invested your money in GME because you believe in the company, nothing fundamentally shifted in this area. Legitimately nothing. Nothing changed in that circle. The only thing that changed were the new people that entered into GME and the old people that just wanted a reason to get out. And now we see the duality of both of those emotions fighting back and forth. But all I can say now is that GameStop has positioned itself to be successful going forward and in the future. Bear Jew is literally one of the characters of the movie. Please shut up. So that's going to do it for our little GME discussion. All right, that's going to do it for our little GME discussion.